Hello, friends. Good morning. Now, I would like to invite you for the fifth lecture series of Unit 4 Non Banking Financial Companies, where we were discussing about the leasing. The remaining part of the discussion of the leasing pertaining to the finance lease and operating lease. In the previous lecture, we have already seen the meaning of the lease and features of the leasing, what the lease actually is. And we have also seen the various types of lease, where most important among them is the financial lease and operating lease, the two types of lease, which always creates a confusion to the students. And these questions are asked many times in the examination. What is financial lease? Discuss the features of the financial lease. Or what is operating lease? Discuss the features of the operating lease. And sometimes question may be asked even, what is the basic difference between the financial lease and the operating lease? Now we will clarify the information relating to this in this lecture series. As I have already discussed with you, lease is a kind of contract between the lessor and the lessee, where the lessor transfers his assets to the lessee for use of the asset. After the particular use of the asset, the lessee transfers back the asset to the real owner, that is the lessor. Lessor is the owner, lessee is the user, where the contract happens, where the ownership lies with the lessor, but only the possession of the goods is transferred, or the product is transferred, asset is transferred to the lessee. Lessee uses it and pays the rent for using the asset. So at the end of the contract will be ending either returning of the asset by the lessee to the lessor, or sometimes the lessee may buy the asset and become the owner, or sometimes the lessor uh, sells out the property and recovers his what you call as remaining absolute value of that. So in most of the cases, lessor, being the owner, will have all the rights of the asset in his hand. Only lessee is user and he uses the assets. So this kind of arrangement is one of the what you call as, ways of acquiring the assets to the by the lessee. So most of the companies, especially small SMEs, small and medium scale industries, instead of buying a huge machineries in their own name, what they do is they get it on the lease basis from the suppliers and uses it. And after using that, they will return back the asset to the lessor. So we have already seen the various examples in the previous lectures. Now we will find out the another that is a type of lease, that is finance lease. See, basically, a finance lease is a arrangement made for acquiring the huge valued property, that is a costly property, uh, by the lessee, taking use of the financial institutions. Mainly, financial institutions will undergo for this kind of a lease. What the financial institutions do is, uh, they finance the lessee, that is the buyer of that particular, that is the user of that particular asset. They finance it. The basic objective of financing is to earn the interest and returns on that, to earn the profit on that contract. The intention of the financial institution is not to acquire the asset. It is a kind of a help made to the lessee to acquire the asset and finances for that particular thing. After the lease contract is over, the financial institutions normally end such kind of a lease contract by selling the property to the lessee, and the lessee becomes the owner at the end by buying the this thing. But for a few years, he will just pay the rent on the lessee pays the rent to the lessor for using that particular property. Actually, the owner of the property is a financial institution which buys the assets for the purpose of using that asset by the lessee. So let us understand each in meaning in detail with the definition itself. According to the International Accounting Standards of Article 17, explains the financial lease. In a financial lease, the lessor transfers to the lessee substantially all the risks and rewards incidental to the ownership of the asset, whether or not the title is eventually transferred. Normally, in the finance lease, the except the ownership, all the rights of the property under lease are transferred from the lessor to the lessee. So lessee becomes the absolute user of the asset except the ownership, because lessee cannot sell the asset to any person unless and until the lessor permits him to sell it. But exclusive owner, the possession and usage lies with the lessee. When the exclusive power of using the asset lies with the lessee, so lessee has certain responsibilities in this financial lease. So lessee being the possessor of the asset, he has to maintain the asset, the cost of maintenance, the cost of what you call repair and everything of the asset lies with the lessee. Lessor is not going to pay anything for repair or maintenance of the property, because as per the will and wish of the lessee, lessor purchases the asset and transfer it for usage, but actual owner of the asset is the lessor. But lessor is just a nominal owner, but real owner of the asset is the lessee. So all the risks and rewards incidental to the ownership of the asset, whether or not the title is eventually transferred, lies with the lessee. It means that any profit, any reward comes out of the asset is being enjoyed by the lessee, but the lessor is no way concerned with all that. His interest is only in investing money in the asset and providing that asset to the lessee, and the lessee pays the rentals on that particular asset to the lessor, that is the lessor. Normally, this finance lease is undertaken by the financial institutions to help their clients. On behalf of the clients, the financial institutions buy the assets and sells the and lease back, that is gives it to the lessee for usage. The financial institutions are no way interested in the asset, they are interested in the rentals and returns on the investments, that's all. But the lessee enjoys all the powers of the asset except the ownership. But at the end of the contract of the lease, the lessee normally purchases the asset, because by the end of the lease period, lessee gets an ability to purchase the asset by using the asset in the business. He earns the profit and that he is going to buy it. So financial institutions, after receiving the expected price of the asset, they will transfer the ownership at the end to the lessee. Normally, this ends the contract like this. It involves payment of rental over an obligatory or non-cancelable lease period. In this period, this lease cannot be cancelled in between that time. Suppose, for example, if the uh, lease period is 10 years in a finance lease, it cannot be cancelled after second year or third year, because it is an obligatory kind of a lease where the lessee has to compulsorily withhold the property and use it for 10 years. He cannot return back and cancel the contract. If at all he is doing that, lessor can take the charge on the lessee and recover the full value of the asset when the contract is being cancelled. So therefore, this is an obligatory and non-cancelable kind of a agreement, sufficient in total to amortize the capital outlay of the lessor and leave some profit. In this case, the main intention of the lessor is get the outlay of the amortize the capital investment. Amortize means recovering the whole capital outlay from the lessee in the form of the rent. The intention is to earn the profit. Financial organization being the lessors, the intention is to earn the profit. In such lease, the lessor is only a financer and is usually not interested in the asset. Remember, financial institutions are interested only in the capital investments and returning the getting the returns on the capital investment. They are not interested in any of the asset. Lessor is only a financer in this case. So such leases are also called as a full payout lease. These kind of leases are also called as full payout lease. For 3 marks in the examination, question may be asked, what is full payout lease? Full payout lease is nothing but a financial lease. You have to write the definition of the financial lease. As they enable a lessor to recover his investment in the lease and derive a profit. So this is what we call as finance lease. What type of assets are normally used under finance lease? Ships. Ships may be a very big what you call as investments. It costs in crores. Normally, the big financial institutions like ICICI Bank or Industrial Development Bank or overseas banks or sometimes of non-financial organizations like construction financial organizations and all that, they are interested to provide financial assistance to the marine transport authorities. So marine transport being becomes the lessee and purchases the asset, right, and purchases the ships by the financial assistance of the uh, uh, financial assistance of the banks or non-financial organizations, non-banking organizations. So the lessor is a financer, that is non-financial, non-banking financial organizations or banks, and lessee is the transportation authority who purchases the ship. So normally ships, aircrafts, railway wagons, land, building, heavy machinery, diesel generating sets, etc. are considered to be the assets normally used for financial lease contracts. So these properties or assets are costly in nature, heavy investments, and financial organizations will assist uh, the lessees, that is the companies who are acquiring these assets, by providing the financial assistance under financial lease contract. In this case, financial organizations are being the lessors are not having any interest in the ship, aircraft or wagons for which they finance. Their intention is to help the lessee to acquire the property and earn the returns, substantial returns on the capital invested. So normally the rent charged is very heavy in this case, and after the particular period of contract, lessee buys the assets, because initially investing huge amount of money is not there with the lessor. That is what lessor undergoes the contract of financial lease. Now, if you see the features of the financial lease, by the discussion, it can be easily understood that normally the asset or the equipment which is to be purchased is not decided by the lessor in a financial lease contract. Normally, the equipment or asset is decided by the lessee, because lessee wants to use that. So the convenient quality of the asset is decided by the lessee, not by the lessor. So lessee decides it and instructs or requests the lessor to purchase that asset and give it to him. Or sometimes what happens, the lessee himself may buy it by paying the money, whatever the quality of the goods he wants, to asset he wants, and gives it back to the financial organization and recovers the payment from it. This is called sale and lease back. It is called sale and lease back. The asset is acquired by the lessee by paying the money, and the whole money what he pays is recovered from the financial organization. Then financial organization becomes the owner of the asset, which they do not use at all, and it is no way useful to them, but it is only for the purpose of financing the assets. So guarantee of recovery of the asset is the lease contract for the financial institutions, for the lessor. And the lessee negotiates and settles with the manufacturers or the distributor the price, the delivery schedule, installation, terms of warranties, maintenance and payment, and so on. So everything is decided by the lessee in the finance lease, because lessee is the ultimate user of the asset. So the lessor is not having any interest in the asset. The lessor purchases the equipment either directly from the manufacturer or distributor, or from the lessee after the equipment is delivered under lease and leaseback, that we have already seen. The lessor then leases out the equipment to the lessee. After the lessee purchases that, and the finance is made by the lessor to the lessee, so finance institution become the lessor. A finance lease may provide a higher or a right or option provide a right or option to lessee to purchase the equipment at the future date. In after completion of the term of the lease, normally the lessee purchases the asset. The lessee purchases the asset and pays back the value of the asset after a few years, charging the depreciation and all that. The lease period spreads over a expected economic life of the asset. Normally, the lease period will be the economic value of the asset of the life. So, for example, if the machineries expected life is 10 years, lease is undertaken for 10 years. After the 10th year, the absolute value of the asset is paid by the lessee to the lessor, and lessor becomes the owner after the 10th year. After the 10th year, normally this kind of a lease is for a lengthy period. It is the lifetime of the asset. And remember, in this case of lease contract, finance in case of lease the financial lease contract, lessor assigns the asset only to one party. He will not change the party during the economic life of the asset. But in operating leases, he changes the lessees at point of time. This is what another difference that we will discuss it in the differences when we are discussing on the operating and financial lease differences. The lessee is entitled to exclusive and the lessee is entitled to exclusive and peaceful use of the equipment during the entire lease period, provided he pays the rental and complies with the terms and conditions. It means that the lessor does not change the lessee at any point of time when the lessee is paying the rentals and abiding by the rules and regulations of the lease contract. There is no point of change. So he can peacefully, aram se, use that asset for his business as a lessee, and should pay regularly only the interest, only the rentals on that. So the financial organization, being the lessor, are only interested in the rents, but they are not interested in the asset at all. As the equipment is chosen by the lessee, when the lessee himself is choosing that and doing all that, the responsibility of it is substantially the risk of obsolescence and the liability for repairs, maintenance, and insurance of the equipment rests with the lessee. This is very important. This is the ultimate difference between the operating lease and the financial lease. The risk of the asset, if at all asset obsoletes, repair has to be made. If at all it is stolen away, recovery of the insurance has to be made. All that uh, responsibility lies with the lessee. Even if the owner of the property is the lessor, lessee has to accept these responsibilities because the asset is decided and purchased and exclusively used by the lessee. So the responsibility of all the asset like a owner lies with the lessee only. Lessee has to do that. Lessor is not interested in any kinds of maintenance of assets or risk associated with the asset. So this is what the basic difference between the financial lease and the operating lease. Now, the another type of a lease, that operating lease, normally it is a quite common of a lease, and financial lease is normally for the business purpose. Operating lease is for any individual common purpose person who uses the assets. So, according to Indian Accounting International Accounting Standard 17, in operating lease, also known as service lease. Operating lease is also known as servicing lease. That is like a financial lease is called as full payout lease, and servicing lease is always a operating lease. In the examination, question may be asked, what is service lease? It is nothing but a operating lease. The lessor does not transfer all the risks and rewards, including incidental to the ownership of the asset, and the cost of the asset is not fully amortized during the primary lease period. It is when you understand the financial lease, operating lease can easily be understood. What is not a financial lease is always a operating lease. In this operating lease, the asset is decided, asset quality is decided, everything is decided by the lessor. Lessor just gives it to a lessee to use the property for the rental basis. Lessor is more interested in the property also and interested in the rent also. And lessee has to use the property given to him by the lessor and pay the rentals. Normally, in operating lease, the lessor, that is the owner of the asset, will change the user, that is the lessee, many times. Like for example, uh, the owners of the house, when they give the house on rental basis, so they will not give the house on the rental basis to the full life of the house to any lessee, because in operating lease they will give it for a few years to the tenants, that is the lessee. After that particular 1 or 2 years, the lessee has to vacate the house, and the lessor will give to another person, another lessee. So during the lifetime of the asset, lessor will change many times the lessees in operating lease, because in this operating lease the asset is given for just an operation purpose to the lessee, and he will change the lessee as and when required. This is what. For example, uh, uh, sorry. For an example, the taxi owners or the car owners will give it on the rental basis to the clients, and after one particular trip, the car will be given back to the car owners, and car owners will change the lessee then with the same asset again and again with the many contracts. This is what operating lease example is. The lessor provides the services other than the financing of the purchase price and all that. So here lessor provides the services by providing the asset to the lessee for usage. Attached to the leased asset, such as maintenance, repairs, and technical, all services, all risks lies with the lessor, not with the lessee. Lessee is just a user of the product, user of the asset, but he is no way connected with any of the risks involved with the asset. Lessor becomes the responsible person for all that. He has to maintain all that. For example, if the house is given on rental basis, the repair, painting, everything is made by the lessor, not by the lessee. Tenants will not made any expenses. Even if they make any expenses on the house, they can recover it from the lessor on behalf of the lessor. If the lessee makes any repair and all that, repair cost is recovered from the uh, what you call as a owner, or it is adjusted in the rent. This is like that. That is the lessor does not depend on the single lessee for this recovery and all that. Normally, operating lease is for computers, office equipments, automobiles, trucks, other equipments such as tools and all that may be given on rental basis to people, like that. Telephones sometimes. Now there is no any such kind of contracts with telephones because everybody is having a mobile now. In earlier days, some temporary offices were provided the telephones. Even the telephones are also provided by the BSNL earlier, but the telephone ownership is not with the user because the equipment owner was the BSNL only. If at all any damages happens to the telephones and all that was repaired by the BSNL company, and for using the telephone they used to charge the rent, and for the uh, calls and all that they used to charge the what you call as call rates on the rental basis. So this is was the contract in the with the BSNL organizations, with the clients and all the telephones and all. So now features of operating lease. You can easily make the list of the features, understanding the meaning of it. An operating lease is generally for a period significantly shorter than the economic life of the leased asset. That is what the leased asset where life is more, whereas the contract undertaken for that is less than that. So therefore, lessor can change many lessees during the life of the asset. This is one basic feature. In some cases, it may be given on hourly, daily, weekly, or monthly basis. Uh, in some cases, the asset may be given for usage to the lessee on hourly basis, on daily basis, on weekly basis, or on monthly basis. For example, cycles taken on rental basis for the using in the town and all that earlier, uh, people used to pay. Now there are motorbikes, cars given on hourly basis to the users. So users can take those things and use that for 1 hour, and per hour rent is charged. Sometimes it is a daily usage, sometimes it weekly or monthly basis like that. The lease is cancelable by either party during the lease period. At any time point of time, either the lessor may cancel the contract or lessee may cancel the contract even before the contract period is over. The lessee may call back, lessor may call back the asset at any point of time whenever he wants to use it, or the lessee may return it only when the work is completed. Contract can be cancelled. Since the lease periods are shorter than the expected life of the assets, the lease rentals are not sufficient to totally amortize the cost of the assets. Remember, the returns that is being given by the lessee to the lessor in the form of a rent is not amortizing, is not equal to the price of the asset. It is just a nominal rent that he collects it and uses it. When many people or lessees are using it, so during the lifetime of the asset, the lessor will amortize from different lessees the value of the asset. Amortizing is recovering. So the lessor does not rely on the single lessee for recovery of his investments in the operating lease. He has the ultimate interest in the residual value of the assets. See, the lessor has more interested in the residual value, that is the depreciated value of the asset, and he sells that asset after the depletion and recovers the whole that is the residual value of the asset. A lessor is more interested in that. The lessor bears the risk of obsolescence and everything. Operating lease normally include maintenance clause requiring the lessor to maintain the leased asset and provide services such as insurance, support staff, fuel, and so on. Sometimes even the support staff is also given by the lessor to the lessee. For example, the JCB machines if they are to be used by the lessee for digging and construction purposes, lessee gets the that JCB along with the driver and along with the what you call as cleaners and all that. So lessor provides the JCB along with the maintenance staff, support staff. The fuel and everything will be put in such kind of machines by the lessor himself. Lessee is just to use it and pay the rentals on that particular thing. Examples providing mobile cranes and operators, that is char- chartering of aircrafts, ships, including the provision of crew, fuel and support. If any big industrialist takes the charter plane for transportation, charter planes are given on a lease contracts. So providing all that crew, staff, fuel, everything. Hiring of computers with operators, hiring of taxi for particular travel with the driver. So all these are the examples of such kind. Now we will find out the difference between the operating lease and the financial lease. So we have already seen the meaning of the operating lease and financial lease. See the ownership point, if you consider differentiation between the operating lease and the financial lease, in case of ownership, in case of operating, the ownership is with the lessor. The ownership is always lies with the lessor, and it lies with the lessor only throughout the life of the asset. But in case of financial lease, transfer option at the end of the lease period is there with the lessee. Lessee becomes the owner. Chance is there with the lessee to become the owner, provided if he pays the expected price of the obsolete machine or obsolete asset to the lessor. So lessor is more interested in ending the contract, lease contract, by transferring the asset to the lessee. But in case of operating lease, lessor is no way connected, no way interested in transferring the ownership. Next one is risk and rewards related to asset. Any risk or rewards that asset creates. In case of operating lease with the lessor, lessor is interested in the risk and rewards, whereas the lessee, in case of financial lease, lessee is more interested in the rewards and repairs and rewards, risks and rewards. Purchase option does not have any purchase option. The lessor does not provide any purchase option to the lessee. But in case of financial lease, the lessee have a purchase option. Then expenses borne, all expenses are borne by the lessor in case of operating lease, but in case of financial lease, all expenses are borne by the lessee. Running cost to lease, any in the running cost, no running cost or administration costs are given to lessee, but running cost and administrative expenses are higher in case of financial lease. Running cost and lease contracts, the rentals will be charged very high, including the returns on investment and all that. Tax benefit to lessee, if you consider, no depreciation can be claimed by the lessee. No depreciation can be claimed by the lessee in case of operating lease. In case of operating lease, the depreciation and every kinds of benefits are claimed by the lessor, because depreciation is having a tax rebate in the calculation of the total income. In case of operating lease, the depreciation and everything is enjoyed by the lessor, the rebate on the depreciation. But in case of financial lease, interest and depreciation both are claimed by the lessee. This is how we can differentiate between the two. I thank the students for the patience listening, and I request the students to prepare well for this, because in many cases in examination question will be asked on this. What is financial lease? Discuss the features of the financial lease. What is operating lease? Discuss the features of the operating lease. Then difference between the operating lease and the financial lease. So thank you.